Hi, I'm Tara with Money Management International, a full-service nonprofit credit counseling organization. Business owners know that a solid budget and positive cash flow are instrumental for success. But did you know that according to thezebra.com, 23% of small business owners list lack of capital or cash flow as their number one challenge? In this video, we'll explore tips and strategies to help you build a solid business budget and manage cash flow, particularly during times of challenge and growth. It's important to separate business from personal expenses. This can help give you an accurate snapshot of how your business is performing anytime you need it. The ability to easily identify and track revenue and expenses, pay invoices, and access balance sheets and other reports can mean more time to focus on growing your business. And you might also benefit from tax deductions, better protection of business and personal assets, and stronger borrowing power as you build your business image and credibility. To separate business expenses, first visit irs.gov to apply for an Employer Identification Number, or EIN, to identify your business for tax and accounting purposes. Next, open and maintain a business bank account, and visit dnb.com to apply for a DUNS number for credit reporting purposes. Then apply for a business credit card to start establishing business credit. Maintain separate business records and receipts, especially if you work from home or use personal assets like your car or phone for business purposes. Pay yourself a salary consistently and regularly, and be sure to communicate with business partners and key players so everyone's on the same page with your financial intentions. A strong budget is the foundation to help you manage cash flow and sustain a profitable business over the long term. To build a budget, start by identifying business goals and your break-even point. If your business reaches this point, you'll need to generate additional revenue, liquidate assets, or make reductions to meet operating costs. Then, identify income or revenue through profits. Project expenses, then do the math and adjust the budget as needed. For example, if negative cash flow is projected past your break-even point, you'll have to make adjustments to manage cash flow. Managing your budget will require you to review accounts, profit and loss statements, sales trends, and more on a regular basis. Managing your cash flow at each phase of your business is key to navigating growth, challenges, and changes. It's important to understand the life cycle of a business and pace your finances accordingly. Here are some great tips from Zoho.com on managing cash flow during various stages. When beginning your business, the goal is to market your product or service, establish a client base, and create a positive cash flow. So plan for expenses related to startup, training, marketing, and advertising. During this phase, you'll likely spend more and have lower sales. So rely on your budget and keep a close eye on your spending. Set up a payment structure for getting receivables or income regularly and on time. And consider automating regular expenses and income to help build cash reserves. After a successful launch, you'll be working to attract clients, build your brand, and grow your business through consistent revenue and strong cash reserves. Plan for expenses needed to promote your brand and outpace your competition. Times of growth are exciting, but more consistent revenue and increased profit means more expenses for things like salaries and supplier costs. Work to establish a strong credit history, monitor incoming and outgoing cash, forecast goals, and revise plans accordingly. And use excess profit wisely by reducing debt and building cash reserves. Well-established businesses enjoy a loyal customer base, consistent revenue and expenses, and steady profits. During this phase of maturity, you'll want to keep things running smoothly, attract new and keep existing customers, and stay relevant and innovative while increasing efficiency and profitability. Expect steady cash flow and keep using excess profit to ultimately eliminate debt while growing cash reserves. If sales and profits lag, adjust and cut costs to help maintain a positive cash flow. Businesses must keep up with changing demands and challenges posed by competitors. Stay steady, always looking for ways to innovate and remain competitive. If business is steadily declining, take action by implementing cost-cutting measures and strategies to renew or reinvent your business. And if renewal isn't possible, take steps to close the business legally and ethically, which might mean liquidating assets to pay employees and debts and settle with stakeholders. Regardless of what stage your business is in, it's key to plan, prepare, and position your finances for success. A cash flow statement can help you do this. A cash flow statement is a summary of cash and cash equivalents coming into and going out of your business. There are many resources to help you build and maintain a cash flow statement, like this guide from Harvard Business School online. To build a cash flow statement, determine the starting balance of cash and cash equivalents at the beginning of a reporting period. Then, calculate cash flow from operating activities by subtracting all cash operating expenses from all cash operating income for the reporting period. Next, calculate cash flow from investment activities by detailing income and expenses from long-term assets like property, facilities, and equipment. Calculate cash flow from financing activities related to raising money and repaying debt borrowed from investors and creditors. Then determine the ending balance of cash and cash equivalents at the end of a reporting period. To see net cash flow, subtract the ending balance from the starting balance. A positive number indicates you earned more money than you spent. A negative number means you spent more than you earned. Analyzing things like market trends, past data, and forecasted models can help you project cash flow and make strategic adjustments. Consider creating a simple Excel spreadsheet that projects detailed income and expenses from all categories for the next year to help stay on track. For each month, list projected beginning balance, assumed cash flows from all sources, and ending balance based on the previous month's projections. To learn more about this method of projecting cash flows, check out Fundera by NerdWallet at fundera.com. Regardless of the method, projecting cash flow and creating multiple diverse strategies for generating business and revenue is important to helping your business weather a financial storm. So take time to build and maintain a strong plan that includes many strategies to help you be successful. Here are some resources to help you get started. Visit irs.gov for general business information and to apply for an employer identification number. Visit Dun & Bradstreet at dnb.com to apply for a DUNS number. Compare business financial products at bankrate.com. Zoho.com offers tips for managing cash flow and to build a cash flow statement. Visit Harvard Business School online. Fundera by NerdWallet has a tutorial on projecting cash flow. And the United States Small Business Administration provides information on starting and managing a business. Thank you for joining me today. For more small business or general financial wellness topics, or to connect with us here at MMI, give us a call at 866-889-9347 or visit us online at moneymanagement.org.